Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for a pretty active Monday, the 23rd of May, 2022, about 5:50 p.m. Central Time. So, something to remind you of. Strong Mondays often lead to a weak attempt at a reversal on a Tuesday. We'll see if that's the case. You're certainly starting that way on the first 50 minutes of the reopening of the markets. I think you can see that. The dollar got hit very hard today, but it hit a Bollinger Band bottom. Could be an important support zone there. In the grain markets, as I saw it, there's some problems here with getting the corn plantings in. Big problems. And beans are falling because there's enough time to get the crop switched if you have the seed from the corn to the soybean, and some of the farmers may well decide to do that. You're at that critical point now where each day that goes by gets you into that window where yield starts slipping back. Yes, I know that the seeds are genetically modified and so on and so forth, but you're way behind in terms of the corn coming out of the ground, the beginning of the plant, even getting it in some areas, and worrying about that. So just a point of reference to it, okay? Things you have to understand. Bonds and notes not doing much. You're still under the influence of the lost embedded reading in the Bitcoin. The trend is down. You've lost the embedded reading. These two things are fighting themselves. It is a battle. It probably closer to the 33, 34, 3,300 zone than anything. All right. In the S&P, you can see how the market came down, got a reversal, and has some follow-through. This is not a change of trend. I'm watching today CNBC, and all day long they're dealing with people, well, this could be the end of the break. The market's getting ahead of itself, and I'm watching this and I'm going, what are they talking about? I know the stats. The stats, if you go back from 1970 through right now, and you look at the amount of recessions we had and the average pullbacks, 4 of them had pullbacks in the range of 20 to 27%, but you got a whole group of them that extend beyond 30% into the 40s. So I'm not saying that the market has to crash. I would think, I think in the high 40s is very much a crash on your wealth. And I understand their argument that you're already down into the 20% threshold right at the peak of that. There could be another 7%. Why pick a bottom? Let the market tell you when it's bottomed. People want to be the first ones on the neighborhood to say, I got it. Well, you haven't got anything because the Fed has got it. And until the Fed changes its tune, you have nothing. People are arguing what the Fed will and won't do. It's a nonsense argument. The one thing baked in is there's going to be a June rate hike of 50 basis points. While July is a monster probability, probably 99.9%, it's not the 100% that I think you've got for the June time frame. And then nobody seems to know what's going to happen in September because it's going to be a measurement. Did inflation fall on its own or did it pick up? If it picks up, why not go to 75 basis point hikes? If it fell, the Fed still wants to get ahead of the curve. They either stay at 50 or they go to a quarter. Any of those numbers put pressure on the market. The market would have to get a window where it finally believes we're through with this. There's light at the end of the tunnel. The Fed's going to be coming to an end. Do you think you're at that point? What dance did I miss? Because I must have missed the whole prom. Because I don't think that party has taken place yet. Capitulation? Get serious. You're nowhere near it. All right. So as I look at it, you're still very much in a downtrend. Resistance is up here, 4,033, let's call it. I don't see the market yet challenging that. You'd have to get back over this number for the market to say in any manner, oh, we've got something else working here. And what the market's going to do, Ira, is if it gets over that, it gets friendly. No, it doesn't. Even if you clear that level, you've got a lower low, higher high. I don't buy that you have a bull story. I buy that you get high enough, the market's still a short sale. What I do accept is that as the market keeps hitting the Bollinger Bands, you can get streaks where they run it a little bit, but notice it hasn't stayed under it for any length of time. There's one move right here for a day. You got back to it last Thursday, and I believe it was, yeah, that was last Friday. You hit it. You rallied back today. Big deal. Big deal. That's not a change of trend. And momentum is still oversold. It's not up. If it turns up, then I'd get interested. But it hasn't. When you lost the embedded reading, you already got major run, if you will, to the 18-day average. In the NASDAQ, you can't even hold a rally. This is what bothers me about the Bitcoin trade. Bitcoin and the NASDAQ, I have no idea why, they have married themselves, probably because the family of cryptocurrency is internet-based in its own way. People must think that. That's what I'm thinking. Logic at the end of the day is what prevails. You'd have to get in this market back over 12,096 to convince me that we got a bounce that could carry back to the 18-day average. Right here, I'm not seeing anything, and I'm really bothered that you lost an embedded reading and came down for lower lows right away. That is never good action. That is very bearish action still. In the Dow, you're still in oversold territory. Each time you hit the Bollinger Band, you're getting your bounces, and they're not carrying past the 18-day average. So I'll let you be the first guy on the block to be bullish. I'm not interested in selling even the 18-day average while the market's oversold and telling my subscribers, hey, go short here and do that. But I am telling them it's certainly not a buy. In the Russell, the battleground is right here. You have an outside day down. You haven't taken out that high. If you do, what happens? If you do it tomorrow, then I think you go to the 18-day average. If you don't and you start sinking away, I don't know how low you can go, but you've opened the door to 1690 again. It's the strongest of the indices. It's got the best looking technical picture if you're talking a market that wants to hold. I am not saying bullish. I said if you're looking at a market that's acting like it wants to hold. In the VIX, you're still in the bear camp, which I guess is a positive for stock indices because the lower it goes, it gives you an idea of bullishness in the market. You do have lower highs and lower lows, and if the market should take out 2806, about 42 cents lower, that opens the door for a challenge of the 2576 level, as you can see that right through there, down to 2538, the lower Bollinger Band, maybe even the 200-week average. But to get to the 200, you'd really have to have something bullish in the stock market going, which would be that rally I'm not expecting. That would be my guess. In the bond market, you are overbought. The trend is up, but I'm going to repeat myself over and over. I think the Fed has this market's back. And what I mean by that is, remember the bull market in stocks we had up until the beginning of this year, where each deep break, the Fed was there and the market came back in just a matter of days? Well, the Fed is saying, hey, I'm going to keep raising interest rates until I don't have to raise interest rates. That's not what bull markets are made out of on these treasuries. In the 10-year note, the same thing. You've really just gone in sideways action from the lower low of the Bollinger Band to the upper band, and you've had a bullish bias. I've said that, and I said that I don't think it's a wise move to follow that one. I could be so wrong here. If the market breaks out over these numbers, I'll be looking in the 123, 124 area. I'm well aware of it. I am not telling you to go short in an uptrend, but I'm saying don't buy. There's a big difference. In the dollar, I think today was a short cover day. First challenge of the lower Bollinger Band in a very long period of time, basically since the end of March, beginning of April. And each time it's hit it in the past, you've come alive. Okay, so you got to end this wave to the downside. This is a correction based on everybody wants to come to the party with the U.S. Everybody wants to raise interest rates. The European Central Bank talking today, Ms. Lagarde saying that she has a number of bankers on her committee that are not happy with her stance. She's not being aggressive enough. They want her to move quicker on raising interest rates. Well, that bullishness causes this market to lift. I know you'll tell me, well, if they raise rates, it hurts the economy to a degree, but it also fights inflation. That's even a better thing. So they're all looking at this to see what happens. Why does raising rates fight inflation? Because you take purchasing power away. It's a tax on purchasing power. In its most simplest of forms, think of it that way. You want to go start a new business. You're not a good credit risk. Do you think they're giving you the same interest rate as the guy down the street? It's a tax on you. You're not as good a risk. Well, as you start raising rates, the central banks have certain controls. Depends what their edict is. In the United States, it's to control price, inflation, and employment. Well, they have to fight it, so we're going to raise rates. Well, now the European Central Bank has a mandate for stable prices as well. So they have to fight what it is. They're behind the curve, and I think they're going to realize it sooner rather than later. The Brits are feeling the pressure already as the market's coming on. Mr. Bailey's been pointing out how terrible inflation is. He thinks it's going to 10%. He's their central bank governor there. So when will he pull the plug and start raising rates? That becomes the question. The market's in anticipation of it. In Bitcoin, if Bitcoin starts getting under these lows again, there's a problem. If it's going to hold, you need to get over this 30,715 level. The battleground today was fought in the 30,300, 30,400 level, and it lost at the end of the day. The market sank back as you were watching the NASDAQ and the other markets, unable to ever pick up. This is a lost embedded trade. The key is not to take out these lows back here. That's a big risk in it, but it still says that the market's got a shot at getting to 32,366. Yes, that from where we're at right now, it's about an 8-9% rally. In Brent versus WTI, it looks to me like the market bottomed out in that $2 range, and it wants to come up and kiss the differential of 331 between the two prices. We'll see what goes there. When you look at the Brent, you're overbought. The trend is up. You're having great troubles in getting over the upper Bollinger Band and staying there for any length of time, but you are finding on each challenge near it, on the pullbacks, the 18-day average is holding, which is still bullish. In order to break this pattern on the current chart pattern, you have to get under 105.70 in July Brent, and that would break this market in terms of the bullishness. And in the WTI, you'd have to get under 103.24. You're overbought, and I realize it's up there. Overbought, to me, doesn't attract new buying. In gasoline, the market has stalled out. That's the right word. You now have a pattern of lower highs, higher lows, battleground. If you don't see it, get a pair of glasses. It's the 18-day average of closes. It's evident as can be. If the market were to take out this low, I'd scratch my head and go, what's going on? It shouldn't do that. And I think a lot of pros realize that. However, I'm not able to move this, unfortunately. The difference here between these numbers is substantial. It's thousands of dollars. I don't think you're going to find new buyers come in. And in nat gas, the market looked today at the 10-day forecast. I saw what was going on when these forecasts were coming out, and you just took off. You opened steady to lower. Those forecasts are calling for hot weather, summer-like temperatures arriving across the great swath of the United States. Bingo! Away you go. And I told you that would happen the first time they started smelling that, because you have a natural buyer out of Europe that wants all the natural gas we can possibly send them. And now we're going to have our own demand picking up, which is why the Biden administration is making all of these moves now on energy, trying to figure out and protect the party. What party? The Democratic Party. Why? You're going to go into those elections, you're breaking households with all these expenses of their fuel bills. How do they pay them? I mean, it's big money. Your air conditioning bill hasn't kicked up in a great part of the U.S. It certainly has in Arizona and other parts, but, most of us are just getting to the point where we're turning our air conditioners back on. We're getting rid of the high gas bill, and we're about to trade it for the natural gas bill. It's not going to be that much relief, I can tell you that right now. So natural gas gone, for me at least, electricity coming on, it's not going to be pretty. And I think a lot of us are that way. You are in overbought territory. Target, 910. Did I not just tell you, a week and a half ago, I said I think a 9 is going to appear in this market. I know I said it on BNN and and I think I'm going to be on tomorrow, in fact, on Bloomberg in Canada. And I said it 2 weeks ago, I think a 9 is coming. You're at 9, okay? It's that simple. So we'll see what goes on. You know, one of the big things that we're getting, or people are liking, is I'm bringing back some of these indicator series that I put together for you. This is the Arun indicator. It has to deal with time and price together. In other words, if the market's moving up, is it still doing it within the zones? Is it extending further than it should go? Where is it going? I explain how it all works in a video series for you. Your charts will do this. Most charts have this indicator. I teach you how to set it up, teach you what the concept is with these different lines and how they work, where you're looking for crossovers or validation points that the trend is staying strong. How do you get involved in it? It's simple. Go to our website under free offers and/or take your cursor, just push it up here and go from there. I'm Ira Epstein. You have yourselves a great day. I'll see you all tomorrow morning. Take care.